Please. Okay, are there any declarations of pecuniary interest? Seeing none. Dun 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 dun. Dun 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 dun. Where's that gavel? All right, opening remarks, Mr. Murray.
Clicker right there.
There we go. Okay, good afternoon, Chair Strickland, councillors. So I'm going to provide just a few introductory comments. I think you're kind of used to this. Just kind of a really, really high-level overview of the 2020 budget. So this is kind of council's first real day to get into the budget. Staff have been working on it for many, many months. And, every year has its own challenges. This year, one of the really unique challenges has been, I would call it the provincial roller coaster. So it has changed from week to week, from month to month. Staff have been responding regularly, I think providing regular updates to council. But it has created challenges over the last few months. So landing in a, pretty good spot. So some of the particular challenges, though, that, you're going to hear more from Craig about that are really driving this year's budget. Base budget pressures, funding for infrastructure, and budget issue papers, mostly related to implementing a number of our big master plans. So I'm just going to talk really briefly about each of these factors that's driving the budget. So base budget pressures, some of the things that have happened that are putting overall upward pressure on the base budget. Annualization of 2019 service enhancements. You'll think back a year, we had significant enhancements to Grand River Transit, significant enhancements to paramedic services and others, and now we're dealing with the annualization costs of some of those service enhancements. Funding for development charge exemptions. Again, a few months ago, we worked through the whole development charge bylaw. Part of that was exemptions, and what Craig and I said at the time is there's a cost to all that, and there is, and we're dealing with it as part of the 2020 budget. And then there's just sort of the ongoing, increased costs of doing business, fuel, winter maintenance, service contracts, all putting upward pressure on our base budget. Infrastructure funding is also an ongoing theme. You've heard about this over and over again, and I think it's important to keep in mind, in this community, in Waterloo Region, we have this dual challenge of funding, rehabilitation, replacement, state of good repair on our, $4 to $5 billion of existing infrastructure. We've got aging existing infrastructure that we have to continually maintain, renew, upgrade, rehab, replace. And in some of our program areas, most of that state of good repair work is being debt financed, which is like, replacing the roof on the house on your credit card. So we do not yet have adequate sources of annual ongoing funding to fund state of good repair. So that's one challenge, existing infrastructure. And then, because we continue to be a growing community, we also have the dual challenge of adding new growth-related infrastructure at the same time as we're repairing and replacing existing aging infrastructure. Some communities have one challenge or the other. We're in the enviable position of having both challenges. And master plans, I talked about some of these. So there's, just a few of the master plans that, council has approved, and then incrementally we implement through budget issue papers, and then council needs to deal with, next year's financial impact of paramedic services master plan, the transportation master plan, GRT service expansion, mobility plus, and recently council approved the first ever Waterloo Region housing master plan, and as we talked about just last week, that has some implications for the 2020 budget. So there are the three big drivers. So annualization, infrastructure, and master plans. As always, staff have done a huge amount of effort digging into our existing base budget and looking for, we call it base budget adjustments, so efficiencies, cost savings, things that we can do to adjust the budget that don't impact service levels. So these are things like energy efficiency, adjusting staffing levels, looking at overtime, looking at new revenue streams or increased revenue streams, and then all the nickels and dimes that add up across the organization. And so, really happy to say once again this year, I think staff have done a really good job. So on the levy side, about $1.6 million in base budget adjustments overall. When you add in the user rate areas, over $3 million of base budget adjustments. So, over the last 5 years, over $13 million of base budget adjustments. So I think that helps deal with the budget pressures that you're facing. And it's taken a lot of work to get to this point already. So looking ahead, there are a number of challenges on the horizon. And part of the reason for putting this up is my encouragement to council as we work through the 2020 budget process is I'm encouraging you to take a long-term view, because next year's budget will be on us before we know it. And some of the things that we've avoided this year, like some of the big impacts of provincial funding reductions, Craig's going to show you, they're going to hit us more in 2021. So, some of the future challenges, ongoing infrastructure funding, where's the economy going? I think there's lots of questions about that. Provincial funding changes, the province has deferred some of these funding changes. They haven't canceled them, and they're going to come back. And then, the whole host of issues in master plans and strategic plans. So my encouragement to council is, as we work through the challenges over the next, 6 to 8 weeks, try to do that with a long-term perspective. So that's my kind of quick overview. If you've got any questions, I'll try to answer them.
Thank you very much, Mr. Murray. We do have a question. Councillor Jowett.
Thank you. Mike, I just wanted to ask, you made a really significant point when you speak to infrastructure, how we suffer from both the existing and new infrastructure pressures. Do we have any kind of a prediction when we're going to be not in the position of looking at new infrastructure at the same level, given that we're running out of, I know that we're always going to be replacing, repairing, existing, but I mean, at what point do we run out of that situation where we have both?
So I would say that would only happen if and when growth in this community slowed down significantly or stopped. And I don't think that that's anywhere on anybody's horizon. If you look at all the provincial directions, it's, we're going to continue to grow. And I think all the fundamentals are there, that this community, diverse, growing economy, on the fringe of the GTA. So, as people are migrating in this direction from the GTA. There was just a session at lunchtime on immigration. We're an increasing magnet for primary and secondary immigration. So I don't see any time, in the short to medium term, growth slowing down. And as long as growth is continuing apace, we're going to need to continue to expand infrastructure.
So I guess
water, wastewater, roads, transit.
Yeah, I guess it's the way we define existing versus new, right? So I kept looking at new as when we are developing new lands, new neighborhoods, new commercial opportunities. That's what I looked at as new, but that's maybe too
Yeah,
fine a
so I would
definition.
say, growth physically is happening both on our urban fringes, so that greenfield type development that needs pipes extended, needs new roads, but it's
still
also
there.
happening in our existing built up areas. That still adds to water supply capacity, wastewater treatment capacity. So we need to continue to expand water, wastewater, waste management, transit, rapid transit. And then if growth is happening on the fringe, then we've got transportation infrastructure, roads, road widenings, new roads.
And so the new is literally where we have not gone before, and we are trying to grow up rather than out.
Yeah, so call it, probably growth-related infrastructure is a better term than existing. It's like expanding infrastructure, adding capacity, water, wastewater, transit, roads.
Okay. Thanks.
Okay, thank you, Councillor Jowett. No further questions, Mike. Thanks very much.
Over to Craig.
I'd just like to make a couple of opening comments. We've all read the package, and I'd like to compliment staff. We gave direction earlier this year to come back with a draft budget with a proposed tax increase of 2.5%, and we have 2.58 in front of us, so I thank staff for that. I also thank staff for the base budget reductions yet again this year, and $13 million over the past 5 or so years is significant, so we appreciate the work and the diligence that staff take in approaching budgets each and every year. But when we look at the total where we're at, and this number is no surprise, if we're at 2.58, assuming we approve the staff's recommendations, we have a long way to go in that regard. But if we did, just assuming that, plus the police increase, police have proposed an increase of 7.2% in their overall spending, which translates into 1.77 for us for a total between our services and police of 4.35. So that's the percentage increase we're looking at right now. Last year we approved between police and region a total of 2.97. So I don't think 4.35 is something that anyone around this horseshoe really wants to live with, but we do have some budget challenges, as so nicely illustrated by Mr. Murray, and there's some contractual obligations of police services. But 4.35 is a number that I hope we're going to be able to reduce and reduce fairly substantially over the course of the next few weeks, leading up to Budget Day on January 22nd. So I look forward to the discussion, the learning, and the deliberations as we go through this annual process. So, Chair Redman, you have a comment?
If I may, Chair Strickland, I do appreciate that you're sort of just doing first blush, which is where we're at, but just to underscore the fact that the police board, and I have two colleagues, Sandy Shantz and Kiefer, who are on the police board, and we continue to discuss and look at ways of savings. We have some big challenges at police services too, but we're continuing to do our work.
That's great. Thank you for that, Chair Redman. And anything you can do from police services to bring that number down between now and January 22nd, or even if in the past we've been able to defer some police budget changes and increases to subsequent years. So anything you do to be creative to help us with that overall number, I'm sure everyone on committee would appreciate. Thank you. All right, Mr. Dyer, it's your show, and it's your show for the next 3 to 6 weeks, I guess. But we all know it ends January 22nd.
Yes, definitely ends on January 22nd. So thank you, Mr. Chair, and welcome to Council to your second budget of this term of Council. Over the next 3 or 4 meetings, we'll be taking you through the highlights and certainly some of the details of the various regional programs as we head towards approval of the user rate budgets scheduled for December the 11th and for the tax-supported budget scheduled for January 22nd of next year. Today is typically what we refer to as Budget Overview Day, so it's an opportunity for us as staff to provide Council with an update on where we're at in terms of the preparation of the 2020 budget. We'll talk about a number of different items. We'll give you an overview of the major factors that we see impacting the 2020 budget. This is a bit of a follow-up to the report that we provided back in August, where the timeline was established and where the guideline was set for tax-supported services. We'll do a bit of a preview of the 10-year capital program. There's still work going on as we speak on that capital program, and I'll explain why in this presentation. Talk a little bit about budget issue papers, the proposed service expansions that Mr. Murray referred to in his, in his opening remarks. And as always, it's an opportunity to get some early feedback from Council. If there are questions you'd like answered, if there's analysis you'd like to have provided, if there's anything that we can plan to bring forward over the next couple of meetings that will help you in your deliberations of the 2020 budget, this would be a good time to start, and there'll certainly be opportunities over the next few months, sorry, the next few weeks as we go through the budget process. So in terms of today's agenda, a brief introduction, which we've already done. I'll do a little bit on economic indicators, not too much because we covered this in some detail back in August. And then get right into the overview on both the user rate, tax-supported budgets. We're going to talk specifically about the funding and financing of growth-related infrastructure and public engagement. And just in terms of the agenda, the formal agenda, there are 3 staff reports on the agenda. One is the budget overview, which is an information report. One is the public engagement strategy, where we're looking for some endorsement of the proposed approach for the 2020 budget. And then the growth-related infrastructure report, which has a few slides all to its own as a result of some announcements made by the province last week. So we'll get to that in due course. Budget cycle, so we're right at the outset of the cycle from a budget committee and council review perspective. As Mr. Murray indicated, we've been working on this for many months now, and we're delighted to be at the stage where we can now present the information to council. Preliminary budget document's going to be available next week in anticipation of the November 26th meeting. We'll go through our reviews and inputs, approval as indicated, and then we move into the variance reporting stage as we head into next year. Few background introductory slides. This is one that we would typically show to provide perspective in terms of municipal tax dollars relative to our federal and provincial counterparts. And overall, the municipal property tax comprises about 9% of the total of taxes collected between the 3 levels of government. If we look at more locally within Waterloo region, looking at the average property tax bill in 2019, just over 50% of it relates to regional services, almost a third relating to local services, and then about 15% relating to education taxes. And this, of course, will vary. It'll vary by municipality, it'll vary by property class, but on the residential side, this is what typically you would expect to see. And this is a repeat of one of the slides I showed when we did our budget overview last year, but I think it just provides a good high-level overview of basically how the budget works and what we're actually calculating. So for both user rates and property taxes, we start with the operating expenditure, total operating costs for each of those services. On the user rate side, we add funding for capital, and that can be in the form of debt servicing costs or contributions to a reserve for future capital works. We back off any recoveries and surcharges, and what we're left with is the user rate revenue requirement. And then if I extended that math, we would divide that by the projected flows, and we would get a user rate. And then similarly on the property tax side, same math, expenditures plus capital. We back off grants, subsidies, any user fees and charges, and what we're left with is the property tax levy requirement, which we would divide by property assessment to get a tax rate. So the math works the same on both sides, and at a very high level, this is what we'll be looking at over the next few weeks. I've shown this slide before. It's probably a bit nerdy to say I have a favorite budget slide, but these next 3 are some of my favorites because I think they provide a really good overview of the varying extent to which regional services are funded by our 3 main sources. So we start off here with property taxes. This is going to be in descending order by overall program spending. Police, public transit, community housing, waste, roads, heavily funded through the property tax. If we add on provincial federal subsidies, we can see the various services that are heavily or partly funded by the province: income support, housing, children's services, senior services, public health, paramedic services, all have significant levels of provincial funding associated with them. And then the third piece that we tack on is the user fees and charges. And so we range here from water and wastewater that are 100% funded by the user fees, Other areas where we collect significant fees, public transit, seniors, waste management, and then to lesser degrees, the remaining services on the list. So this gives you kind of the full picture of all of our, outward, public-facing services and how the funding challenges will differ from service to service, partly because of the nature of the service and then partly because of the varying degrees of funding that we have for them. The other thing I'll just mention quickly, long-term master plans. Mr. Murray touched on this in his comments. They find their way into the budget on both the operating and the capital side. Many of these were approved, updated recently over the last few years. Paramedic Services had a recent update brought forward to this council back in September. Airport, transit, police facilities, water and biosolids, transportation, most recently the approval of the Waterloo Region Housing Master Plan, and still underway is an update to the Regional Accommodation Master Plan. And we'll see these master plans reflected in the 10-year capital programs, in the existing base operating budgets, and in the budget issue papers where service expansion is being proposed. Wanted to also just touch briefly on the recent Moody's credit profile. You recall we had the profile was updated a couple of weeks ago, brief report to committee and council, and just a couple of excerpts from that profile. Moody's referenced strong fiscal management, prudent long-term planning, right? A wealthy economic base and sector diversification. So this speaks to the strength of the assessment base that we have here in the region. Challenges, weaker liquidity levels. You can just describe this as basically lower cash and reserve balances and higher debt burden than our peers. And so that's why we have our regular emphasis through budget meetings on the amount of debt that we're issuing and the kinds of projects that we're issuing debt for. And Moody's also indicated they expect a slower pace of debt growth over the next 2 or 3 years as we emphasize more on pay-as-you-go financing for capital projects. And that finds its way through the capital asset renewal funding strategy and our goal of focusing debt on new significant infrastructure expansions. Speaking just briefly to the economic climate, just a standard chart that we typically show. Just a couple of items here I thought were worth mentioning. The cost of borrowing. So a year ago, I think we would have stood here and said, well, the cost of borrowing has nowhere to go but up. And it has come down, and it has come down fairly significantly over the last 12 months, where a 10-year Region of Waterloo issue we could do right now at about 2.3%. Which is, as you can see, lower than it was a year ago. On the flip side, price of oil has increased, and we've seen that in higher fuel prices as well. Price of oil currently in the range of $58. Excuse me. The other item, just briefly, the provincial government delivered its fall economic statement last week. So a year ago, a $7.5 billion deficit. Most recently pegged at $10.3 billion for this year, now reduced slightly to $9 billion in accordance with the statement from last week. So just to touch a little bit more on fuel prices, we thought we'd just show what we've experienced this year, and I'll just run through quickly how to read this. So the blue line is the weekly price that we pay for diesel. And you can see how much it's fluctuated over the course of the last 10 months. Prices were dropping over the start of the year. The region's budget for 2019 was approved in late February, and almost immediately prices started to increase. So interesting timing there. Increased all the way through May and then have settled back down through the summer. We've seen an uptick again in the fall, but overall, so two key lines here. The red line is our average price per year, which is almost exactly what we budgeted in 2019. So on average, it looks really good so far this year, although has come up again in the last few weeks. The yellow line represents the price that we've assumed for the 2020 budget. So for diesel, we've gone from, I believe, 97 cents a liter to $1.01 a liter. And that's for two reasons. One, the increase that we've seen over the last, let's say, month and a half to 2 months that you see on the very right-hand part of the chart. and also the expectation that the carbon pricing charges will be phased in over the course of next year. So at this, we went back and forth, but kind of settled on $1.01, so 4 cent a liter increase from the budget this year. And similarly with respect to unleaded, so again, you can see that sharp increase from February through till late April, early May, and then settling back down. We are above our budget for 2019. So the red line is the average cost. The the green line at 92 cents is our budget. So we've increased the budget from 92 cents, I believe, to $1.02 or $1.03, somewhere in that range. From a budget impact perspective, the vast majority of our fuel costs are on the diesel side. This has a much smaller impact, but will certainly affect, among others, paramedic services, police, corporate fleet, and other services. So with that, Mr. Chair, I'm going to move into water and wastewater overview. Not sure if I should pause for any questions at this point.
We do have one question, Councillor Galloway.
Thank you, Mr. Chair. Craig, remind me, if you can, on the history of education taxes and how it fits into property taxes.
The history of education taxes. Where would you like me to start?
In the beginning of time.
1965.
1965. Maybe I'll start around. I'll start around 1998. So the most recent significant reform of education taxes came under the Mike Harris government, which coincided with the Who Does What local services realignment exercise in the late 1980s. And if I recall at that point, the residential property taxes were reduced by 50%. And that created, I'll say, capacity, if you will, within the overall tax bill for other services to be adjusted. Since then, I would say it's been relatively stable. The province sets a province-wide residential and multi-residential education tax rate. So one rate across the entire province, because the entire province is on the same base year for property assessment purposes. They have over time been gradually reducing the education taxes on various business classes. So commercial, industrial education taxes over time have come down. They differ in different municipalities, and their goal, at least at one point, was to bring the highest ones down to create a more level playing field. In terms of recent developments, I would say that the current government has been very quiet on the topic of education property taxes.
So is that to say that the rate has not increased? I mean, what they've collected has increased because of assessment growth only?
So it's a really good question. I would say that for the most part, at least on the residential side, that's the one I can speak more confidently to, they have been adjusting the rate downward as assessment has been increasing. So every year, so we go through a 4-year reassessment cycle, there are phased-in increases. As the base increases, the rate has lowered to generally collect approximately the same amount of revenue. And that was a fairly consistent pattern, certainly over the course of previous governments. And if I recall, an approach that was, I believe, taken by the current government for 2019 as well, but I'd have to double check on that.
So then it's fair to say that when the cities and the townships collect the taxes through their finance departments, the education tax as a percentage of the total is actually being lowered.
Yes, but, and I'm sorry to say but, so in general, I think that's a fair statement, but that doesn't necessarily apply across the province, because as reassessments happen, different areas of the province experience different rates of assessment growth. And so because there's a common rate across the province, I'll just try to give an example. If the average property taxes in Hamilton, for example, if the average assessment were to increase at a lower rate than the average assessment increase within Waterloo Region, then there would be a shift in tax burden off of Hamilton onto Waterloo Region. But you have to picture that, you have to picture that across the entire province.
Right.
And so basically, if property values are increasing at a higher rate than average, that's going to push the education tax up a little bit. But then there'll be downward pressure from the lowering of the rate, if that makes
Thank
sense.
you.
Okay, we have 2 additional questions. Councillor Foxton and Kiefer. Councillor Foxton?
Thank you, and through the chair, I'm sorry, the ministry's been sending out letters like 2, 3 a day. There was one yesterday that said it was going to be implemented for education immediately, but I can't remember if it was to do with the tax rate or whether development charges. Do you remember? It came out yesterday.
I don't think I've seen it, but we can take a look.
Okay, because
We can take a look. Thank you.
I'm trying to find it in my emails because
Yep.
I forwarded it to my staff, and they said I was shocked because it's being implemented immediately.
Interesting.
If I find it, I'll forward it to you.
Thank you, that would be helpful.
Yeah, and staff will also look into that. Thanks, Councillor Foxton. Councillor Kiefer?
Thank you, Chair. Craig, just wondered if you can enlighten me, or all of us, I guess, a little bit on this, the carbon tax thing, where the federal government, is charging, the provinces, but they're also promising a rebate. How does that flush out for the taxpayers?
So through you, Mr. Chair, I've just flipped back to slide 23 here to show what we understand to be the planned phase-in of the carbon pricing charges. I suppose that's to be confirmed by the recently elected minority government. But this is what we understand the phase-in to be. So we take these increases into account as we try to estimate what the price of fuel will be over the following year. Those taxes are collected by the federal government. The government has also put in place a rebate program for taxpayers, which I think most people would have seen for the first time on your 2018 tax return that would have been completed earlier this year. I think the impact on individuals will vary from person to person based on their own, I would say based on their own spending profile.
Okay, thanks. And what about the province with their lawsuit against the federal government? Will that come into play at all, or?
I would say it's not something we've generally taken into account, I think, in estimating our budgets for next year. So I think it would be speculative at this point to, it would be speculative to speculate on the outcome.
Thank you.
Okay, no further questions. Please carry on, Craig. Thank you.
Okay, thank you. So just quickly on water and wastewater, and just before I get into these slides, I will say that at our next meeting on November 26th, part of that agenda will be a detailed presentation by water services staff that will get into certainly much more detail than I will with respect to both capital projects and items that are affecting their operations on both the expenditure and revenue side. What I'll do today is just give a very kind of high-level overview. Water supply, approximately 54 million cubic meters of water supplied every year through 100 supply wells. We supply to all 7 municipalities and perform the retail function in 2 of the townships, 13 treatment plants. And of course, one of the cost drivers is the higher level of treatment that's required due to our treatment plants discharging into rivers, as opposed to, for example, Hamilton or a Peel region or Halton region that would be discharging into Lake Ontario. As a quick recap of the 2019 budget, was approved back on February 6th, about $138 million of revenue required and a $1 billion 10-year capital program, with user rate impacts ranging from 2.9 and 6.9 on water supply and wastewater treatment, 7.9 and 4.9 on the retail side. So that's what was approved for this year. So just to jump right to what the expected rate recommendations will be. What we've shown here is working from left to right, the 2019 approved rate increase that I just spoke to. The next column is what we were projecting for 2020 last year, which again ranges from 2.9 to 6.9. The recommended rates that will be coming forward as part of the budget are about 1%, and in one case 2% lower than what was originally anticipated. So basically, we've had a look in the updating of our rate model. We've looked at operating costs, we've looked at flows, we've looked at the funding for capital, and believe that we can sustainably put together a rate model that has a lower, word this right, a lower user rate increase than was contemplated a year ago. So what you'll see presented in 2 weeks will be water supply proposed increase of 1.9%, 3.9% for wastewater treatment, and then 4.9 and 3.9 for water distribution and collection, respectively. So again, lower in each case than was originally projected due to changes on both, I would say on both the operating and the capital side.
Craig, we know like a 1% tax increase generates, or costs the taxpayer rather, about $20 for region services. What does this translate into in terms of cash? So 1.9% increase to 3.9%. What does that mean for the average household?
Yep, and you have just anticipated my next slide. Okay. So that's this one right here. So this is based on annual water consumption of 204 cubic meters. The proposed rate increases, again, this is just on the wholesale cost of water supply, wastewater treatment, $4 for water supply and $10 for wastewater treatment. So if you're doing for the year, yes. So if you're doing the math, you would say on water supply, each percent is a little over $2. On wastewater treatment, each percent is a little over $2.50.
Okay, thanks. We do have an additional question, Councillor Galloway.
Thank you, Mr. Chair. Craig, a number of years ago, we lowballed these costs and then had to pay the piper subsequently. I'm not unhappy with you lowering these rates, don't get me wrong, but are we putting ourselves in that kind of situation again where we might have to pay the piper with larger rate increases in the future? I did note that you used the word sustainable, so that provides some cover, but I don't want to revisit that situation we had quite a number of years ago.
Yeah, and through you, Mr. Chair, I would say staff share that sentiment, and we have spent, I would say, a fair bit of time reviewing not only 2020, but looking, through the outer years of the rate model, looking at the planned capital expenditures and the sources of funding. I think what we'll see on the water and wastewater side in terms of capital funding is we're actually in very good shape in terms of the funding of the non-growth portion of our water and wastewater capital projects. We think the model has sufficient contributions to capital to maintain that over the next 10 years. We have some concerns still with growth-related financing, which we'll talk about in a little bit. But I think in terms of the portion of capital that needs to be funded by the user rate, in terms of the projections of operating costs, I would say that we're very comfortable making this recommendation. And I think if we had concerns about long-term sustainability, we wouldn't be making the recommendation.
All right. I appreciate that. What about impact reserves? Is that equally so?
Yes. So when we do the rate model, we're looking at, looking at all components. So we have full, operating costs and revenues, flows, capital projects, capital financing, and then in each case, the two reserves that we manage for both water and wastewater. So we manage both a capital reserve that we use to fund the rate-supported portion of capital projects, and we have a stabilization reserve as well. And that is to provide, it performs a stabilizing function in the event of any significant changes to both expenditures or revenues over the course of the year. I would say water looks really good over the 10 years. Wastewater has a lower stabilization reserve balance. So there's maybe a little bit more risk on the wastewater side, but overall, we think that risk is manageable.
So when you and Mr. Murray talk about our reserves being below the average, not necessarily inadequate, that is exclusive of water and wastewater?
I would say it's definitely exclusive of water. I would say wastewater is, from a reserve perspective, is a little bit more of a concern. I think when we speak to the reserve balance, we're speaking to the cumulative reserves, value of reserves relative to, say, for example, annual property taxes and user rates. So, my ideal would be to have a reserve balance that's equal to 1 year of property taxes and user rates. That would total, say, $750 million. We're less than half of that.
But don't we at some point in time when we're benchmarking and comparing ourselves to other municipalities aggregate our reserves?
We do? Yep. And so when I speak of low reserve balances, I would say I'm speaking in aggregate. Like in total, the level of reserves we have relative to our expenditures and relative to the amount of debt outstanding are low. With respect to user rates specifically, I think we're in very good shape, in maybe even excellent shape on the water side, and I would say okay shape on the wastewater side. And we've seen some of the risks on wastewater over the last few years. We've had, I think, maybe 3 years of rate revenue shortfall on the wastewater side. So we're actively trying to manage that through adjustments to anticipated flows each year. And I think over the last 2 or 3 years, each year we have been reducing the amount of flows, which of course has an upward impact on the rate increase, which is why you see I'll just go back one, which is why you see the rate increase for wastewater treatment being higher than water supply, and it's been that way for a number of years now as we try to right-size the wastewater side.
So I'm not arguing for higher rates, don't get me wrong. I'm trying to understand the rationale you've been telling us with justification that our reserves are lower than, in aggregate, lower than many of our comparator municipalities. So I'm just curious why you're taking that 1% off, because at the same time you're saying the wastewater reserve fund is suspect.
So I would say we're trying to find a balance. We're trying to find the right balance between, ensuring or promoting, long-term financial sustainability of our user rate budgets, and being mindful of the impact on the users as well. So I think, we're constantly trying to find that balance. Our balance this year was to suggest that we think it's manageable on a longer-term basis with a slightly lower increase than originally contemplated.
So just one final question, Mr. Chair. So when we look at the next slide, or the slide that you show the actual impacts, a 1% increase on the wastewater treatment would take that from $10 to $12 or something?
Add another $2.50.
$2.50, yeah.
Okay, thank you, Councillor Galloway. No further questions? Oh, Mr. Murray?
If I could just add one comment to all that Craig said, and that is, I think it's our next budget meeting we're going to have a much more in-depth presentation on water and wastewater. And I think given this discussion, one of the things we'll include in the report, and we'll include some slides, would be what does the rate profile and reserve fund profile for water and wastewater look like with the previous projected rate increase and the current projected rate increase. And what that'll show you is the difference in the 10-year ending reserve fund balance. And I think it'll give you more detail to answer those questions.
Well, what I'm trying to get at is trying to reconcile the narrative that you have been giving us, which I think you have with great respect, quite justified, and then us maybe not taking an action that could in part, maybe in small part, improve that.
Yep. And if I could, I think another slide that we'll bring back a couple of slides. One is, Craig talks about some of the ratios that we look at in aggregate, like debt to reserve ratios, those kinds of things. Like in terms of regional comparators, we're at the bottom of the pack when you look at all the debt and all the reserve funds. Most of our reserves and reserve funds are for specific purposes. So, just increasing the wastewater reserve doesn't help us when we frankly don't have a facilities life cycle reserve. So we're borrowing money to repair our buildings and replace roofs. So increasing the balance in the water reserve or wastewater reserve isn't going to help us with transit rehab, with facilities rehab, with housing rehab.
But it might help us with Moody's.
Pardon?
But it might help us with Moody's.
Maybe.
Although we have the best rate going, but I'm just saying there are other reasons to do it.
Yes, and
I'm not arguing for higher rates. I'm just trying to reconcile.
Understood. And maybe here's just another comment to pick up on Mr. Murray's comments, which were eloquently made. I'm actually worried about my job at this point. Here's the point. So on debt to reserve ratio, for example, which as we said before is much higher than it should be, our focus has been much more on reducing debt as opposed to increasing reserves. So yes, our reserves are low. They're lower than we'd like them to be, but our focus has been on managing and being strategic, I suppose, in terms of the kind of debt that we're issuing. And anything that we can do to mitigate the amount of debt is obviously going to have a positive impact on that ratio. But we think there's more value to be gained at lowering or minimizing the debt part of the equation, the numerator, rather than building up the denominator.
Okay, thank you. Please continue.
So speaking just very briefly to capital, and there'll be much more of this to follow. Capital program is about $500 million, funded in part from user rates and in part from development charges. The debt financing piece is still under review, so we haven't provided any numbers in today's presentation in terms of debt projections, the portion of the development charge portion in particular that's going to be debt financed, because we're still reviewing it, and that will be part of the presentation in 2 weeks. Similarly on wastewater, again, approximately $500 million of spending, 311 from user rates, 178 from development charges, and again, with the debt financing piece under review. So in terms of overall user rate budgets, the proposed rate adjustments are slightly lower than what was projected from last year. We continue to review the financing of the capital program, and we'll bring some news back at subsequent meetings. And again, detailed presentations on November 26th. Next steps, which I may have covered already, detailed presentation, budget approval. So we'll go through the details at the next meeting. The plan would be to approve the user rate budgets on December the 11th, and then the rate changes would come into effect on January 1st. And if there's no further questions on the user rate budgets, I'll turn my attention to the tax-supported budget.
We do have a question, Councillor Jowett.
So I'm going to ask you to imagine a 10-year a 10-year, if you go back to that, what shows our house cost per household increase. Thanks, Craig. And I'm going to ask you to paint a picture for me if I looked at 10 years and I looked at our growth over that 10-year period. And I understand that the more people we have, the more we disperse the costs of this. But I also understand that inflation plays a role, and capital right would play a role, Mike? Okay, and so is there a way to get a snapshot of the last 10 years?
Of the last 10 years?
Yeah, like you already have the data. I'm just wondering if we could see 10 years of the household costs of this. And then,
Absolutely. Absolutely. And is it this kind of information that you're looking for?
Yeah.
The ultimate, so not the budget itself, but the ultimate cost
Yeah.
to the typical user?
Right, and then if we could even show a spike where there was a capital project or an infrastructure spike, or even we had years where we had, I think, double-digit growth, didn't we, Mike? When we,
These rates.
right?
When the rates.
So, like, just so we can see the,
So we could show, I'm envisioning a chart or a table that would show the rate increases themselves over the last 10 years, the impact to the typical user over that period of time, and any language to provide some context in the event that there were anomalies during that period of time. Would that be helpful?
yeah. Could we
We could do,
that?
yep.
Just because I know it's accessible, but I think it's good, I think it's good talking points for people when they start to ask some of these questions.
Yep, and I think through you, Mr. Chair, you'll find some very, interesting numbers with respect to, for example, overall water flows and how the flow volumes have changed over the last number of years.
Yeah.
It'd be very interesting.
And Craig, can we do a similar chart for the tax rate supported budget?
Yes.
So over the last 10 years, and the amount of cash that is generated in terms of increased operating budget?
In terms of the overall tax levy?
Yeah.
Yep.
Yeah.
We can do that.
And FTEs as well. So we have an idea over the past 10 years.
Okay.
Great, thanks. No further questions? All right.
Okay, so turning our attention to the tax-supported budget, just a quick recap. Approved this year's budget back on February the 19th. It's about a $1.1 billion program. Tax levy is about half of that at $540 million. As Chair Strickland indicated at the outset, the average tax rate increase was 2.97%, of which 1.97 related to regional programs and 1% related to the police. And that was all based on assessment growth in 2018 for 2019 of 1.92%. The current status position of this year, of the 2020 budget, is we're currently sitting at 2.58% for regional services. That takes into account numerous adjustments in terms of the base budget, adjusted and recommended budget issue papers to meet the council-approved target, and then less the estimate of the regional share of assessment growth. And all that would take us to 2.58%. So just a couple of key figures here. That's based on assessment growth of 1.77% in 2019 for the 2020 budget. Revenue generated, each 1% of the budget generates or reduces $5.5 million, and a 1% increase on the average household with an assessment at $344,000 would be just over $20. And we'll keep those numbers visible as we go through the process. I'm going to start with assessment growth. So based on information that we received a week ago, after new assessment, I think as of October 31st, there was no new assessment being keyed in. There's still some minor adjustments being made. We're sitting at 1.77%. That's still an estimate, but I would say it's going to be very close. And we should be able to finalize the number when we're back together at Budget Committee in 2 weeks. So 1.7%, just slightly above what the average has been over the last 10 years, but lower than we've seen in the last 2. Mr. Murray referred to our internal review process. So every year we go through a process with every department. We look at.
Craig, sorry, just before we go on to the next slide, I think Councillor Foxton has a question from the previous.
Thank you, and through the chair. Actually, one more slide back, please, Greg. 344,200, is that updated? Like, I can tell you, I haven't seen a house for $344,000 in a very long time.
So it's assessed value versus market value.
Understood.
Right.
Thank you.
So that's absolutely correct. In fact, it's assessed value as of January 1st, 2016. 2016, right.
Thanks.
So just speaking to our internal review process where we meet with each of the departments, we review capital program, we review the base budget, we look at expenditure and revenue trends over the last 3 years, we look at user fees and charges, we look at program expansions, and all that comes together to form the updated base budget. And what we've seen, which was touched on a little bit earlier, was a number of factors that are impacting the budget. I haven't listed all of them. Some of the more significant ones that came to mind are shown here. The annualization of the service enhancements that were approved in 2019, development charge exemptions, and the funding strategy that Council has approved. Adjustments to waste collection and other service contracts, and these are adjustments for anything from inflation to fuel to growth in the system. So as the population grows, as the road network grows, as there's just more volume, for lack of a word, to deal with, overall costs will increase. Winter maintenance, we've had some discussions recently at Council about winter maintenance contracts. We've built all those into the budget. Asset maintenance and renewal continues to be a major focus for us, particularly on the funding of asset renewal. And it's the final year of the Stage 1 Rapid Transit funding strategy. You'll recall we had a final 0.4% to be incorporated into the budget, and that is incorporated in the figures that we showed on the previous slide. I'm going to touch on a few of these in a little more detail. This is the annualization slide. So, and just to make sure we're clear, when we put service expansions in place, they often happen at some point during the year. So we budget for, in this case, a part of a year, and then in the following year, we have to pick up the rest of the cost for the full year. That's what we call annualization. So in 2019, we had about a $5 million incremental levy impact in 2019 for service expansions. Some of those require annualization going into 2020, and that totals about $2 million. So the total cost of those service expansions was about $7.3 million. We've incorporated the incremental 2.1 into the base budget that we're speaking of today. A couple of information slides that hopefully answer questions that often come up. We've taken a look at our major non-property tax revenues. We often get questions about, what have we done with transit fares, with tipping fees, with POA revenues? We thought it would just be helpful to kind of see that all in one spot. So you can see in virtually every case we have increases, a number of them relatively small. And these generally relate back to the variances that we've been showing through the periodic financial reports, right? So where we see a significant variance, we make that adjustment. Where it appears that revenues are coming in very close to budget, for example, POA revenue, we're almost right on target for budget so far this year. So we've made just a very modest adjustment to that budget for next year. Housing rent has increased. We're seeing a favorable variance this year. We've taken that into account in our budget in 2020, most notably the increase in public transit fares. And for a future meeting, we'll bring a continuity that will help explain how we get from the 2019 to 2020 budget, because it's everything from service expansion to annualization to ridership increases to ION, And there's probably a couple of other things in there as well. So we'll bring some more details on that one in particular, just because it's so significant. And then on child care center fees, this relates back to a report that I think came to the previous cycle. The end of the fee reduction pilot means that child care center fees are going to be increasing as of January 1st. We've taken that into account.
Craig, can you please go back to the previous slide?
Certainly.
So are you going to refer, this is related to page 16 in our report. Are you going to refer to page 16 specifically in a later slide?
I am. To be clear, though, so this slide relates to the issue papers that were approved in 19 that have annualization.
Right.
I think the slide you're referring to refers to the proposed 2020 issue papers,
Which adjusts those annualization numbers.
which will be over and above this.
Right.
Will be I would say, will be unrelated to the numbers on this
annualization,
slide.
got it. Okay,
Yes,
yeah, so, but you're going to address that slide?
I absolutely am. I have it in the slide deck.
Okay, thank you.
Yeah.
Councillor Galloway?
Thank you, Mr. Chair. Craig, I'm just curious about the POA fines, and I know we can't, at this table, direct police services in terms of traffic enforcement and the issuance of tickets and such that make up the POAs. But I'm just curious, and maybe this is for our colleagues on the Police Services Board, but I'm just, I was taken, not aback, but surprised that the increase in POA revenue was not, maybe a little more substantial, given the number of new officers that we funded and the annualization of those new officers, which of course is going to be a large driver in the police budget this year. So have we had any conversations with them in terms of what their priorities will be? I think all of us can probably say that we're getting increased requests for enforcement on our streets, and whether or not, and again, I know we're not to connect those dots, but on the other hand, could we not look forward to a larger increase in POAs? Red light cameras, of course, are fixed.
Yep. So through you, Mr. Chair, so we can certainly bring back some, excuse me, some statistics on the number of tickets issued. I think those statistics would show a reduction in the number of tickets issued through the Waterloo Region Police Service. So notwithstanding the increase in the number of officers, I think we've seen that figure drop. There have been, I think, other areas where the number of tickets are up, but I think the ones issued by the Waterloo Region Police have actually declined. And so our projections right now suggest that we're pretty much right on budget. And I'm not sure that we've seen or heard anything significant enough to warrant a more significant increase in the base budget. I think the other item I think I could comment on are the large fines. They've been, I think, a little bit higher in 19 than 18. Sorry, a little bit higher in 19 than in 18, but nowhere near the level that was experienced a number of years ago. But we can certainly bring back some context to show, what's increasing, what's decreasing, and give you a little bit better flavor of what's happening on the POA revenue side.
Thank you.
Okay. Similarly to non-tax revenues, we thought a summary of provincial and federal government funding would also be helpful. So we've shown, I think, for most, if not all, programs, where we get significant levels of funding and how that's changing going into 2020. So just a couple of items here. So we've included federal gas tax in here. Just be aware of the footnote, though. In 2019, we did receive that additional one-time doubling of the federal gas tax, and of course we use that predominantly for roads rehabilitation. The one figure I should probably point out here, and there's a table in the report that speaks to it, it might seem counterintuitive that public health funding is increasing. after all the discussions we've had about public health funding over the last little while. And so there's actually three things happening within that figure. So first of all, the number is going down for the cost-shared programs as we move to the 70-30 cost-share ratio. So that has an impact in the low 2 million, so say $2.3 million or so. That's offset by some one-time transition funding of about $1.5 million. And then in addition, there are funding increases relating to both the seniors dental program as well as for the consumption and treatment services sites. So when we look at funding overall from the Ministry of Health, from the Province for Public Health Programs, the amount is actually going up, notwithstanding the move to a different cost-sharing ratio, which will take us to 70-30 next year. So it's a bit counterintuitive, so we thought it was worthwhile, a bit of explanation here today. The rest, I think, shouldn't come as any surprise. Ontario Works subsidy down because our caseload estimates were a little bit high in 2019, so we've adjusted them down a little bit. And of course, benefits under Ontario Works are now funded 100% by the province. Childcare, we've talked about the funding reduction there. So I think for the most part, we've had conversations about these figures over the last little while. I do want to talk, though, a little bit more about provincial funding in terms of the changes we had this year. So this refers to the roller coaster we've been on since the start of the year, and I thought there's kind of three different...
This is a very good graph.
Thank you. Thank you. I hope it's effective. There's three different ways we've looked at provincial funding. So the first is, it's not on this slide, since the provincial budget in April, I think we've had 6 reports before council. So that just gives you an indication of how much of a moving target this has been. So the first way we've looked at it is, what's our in-year impact? What's the impact in 2019 of the changes? Back in May, we were close to $4 million based on what we understood at that point. By the summertime, that had dropped to, say, 1.6, 1.7 million. By the end of August, post-AMO conference, we were down to almost zero, and currently it's basically at zero. So for all the changes that have been made, we're actually saying that there's really no in-year impact relative to budget. So no variance to speak of. So that's the first way to look at it. Second way to look at it is, what's happening in 2020? So by the end of May, we were suggesting that the impact in 2020 was in the range of $9 million. By the summertime, by August, that had been basically cut in half. We were just below 5. And by the time we get through the AMO conference and to now, we're currently sitting at about $1 million. That's not to say the changes aren't going to happen, but they aren't happening as originally contemplated in the budget and in the days that followed the budget back in April. So it's made this an exceptionally difficult environment to work within and to put credible forecasts and financial analysis in front of council. The third way then of looking at it...
Sorry, Craig, we have a question. Councillor Jowett.
Thank you, through the chair. Just quickly, Craig, you'd mentioned that Ontario Works Social Assistance had a change of less than, right? And so I didn't catch why you felt that there was less than, because as far as I know, WNO DSP, the caseloads have been increasing ever since I got this job. So are you saying that that's that's on a decline?
So I think I would explain it this way. So I think we're referring to the top line on slide 39, the reduction. So I would say we've had a relatively stable caseload for the last little while. That'd be point number one. Point number two is the estimates that we made for 2019 in terms of what the caseload would be and what the cost per case would be were both too high. Oh. So we were too high in 19, and so we're adjusting both the absolute amount of that we're bringing the caseload down a little bit, bringing the cost per case down a little bit as well.
I appreciate it.
Caseload overall, though, I would say is relatively stable. At this point.
Thanks.
Okay, we have additional question, Councillor Clarke.
Thank you, Chair. Does the Ontario Works number include the discretionary benefits, or is that somewhere else?
It would include discretionary benefits in that particular line.
The entire amount, or just the
Yes.
provincial amount?
Sorry, it would, just to be clear, so this is all provincial and federal funding, so this would be, so included in the 114.3 million would be the province's contribution to discretionary benefits.
It doesn't speak to ours,
It does not speak to ours.
but we'll see that information
We,
as part of the tax.
we can provide whatever information on discretionary benefits that you wish to see. So given that you've raised it, we'll put a slide into the November 26th presentation.
Thank you.
Okay. Okay, so then the third, so we talked about in year 2019, impacts into 2020, and then longer term. So this is our current view of what we think might happen over the next couple of years. And let's just go right down to the bottom line here. So if we look at the 2020 column, about $800,000 is the impact that we're anticipating in 2020, all related to public health, net of the one-time transition funding that has been indicated. What happens after 2020, I would say, is anybody's guess at this point. We've put this together based on what we understand is happening with public health and the planned move to a 60-40 cost-sharing arrangement. We believe that we know there are further changes coming in children's services, then we found a way to manage those changes within that particular budget. What's not on here are other programs that may be affected starting in 2020. So we know that the province is looking at the cost sharing and funding for Ontario Works Administration, but we don't know what that's going to look like. We know that there's more changes coming on the childcare side. We know that there's changes coming with respect to how rent is calculated in housing programs, which will affect the level of subsidy that's required. But we just don't know enough about those at this point to be able to quantify it and put it on this table. So this is something we'll continue to monitor, that we'll update as we get more and better information. But at this point, we would say 2021 looks to be a more significant impact year than 2020, predominantly because of the next planned move to a 60-40 cost share split for public health. But I would say it's probably incomplete, and there'll be more changes to this table to come over time.
Okay, we have another question, Councillor Clarke.
Thank you. With regard to the fee reduction pilot, I know we received this information in a report, I just can't remember. Did we self-fund that for 2019 or for a portion of 2019, or was it funded for the duration?
It was, my understanding, it was funded for the duration of 2019 by the province.
Okay.
Okay, so that's kind of a summary of provincial funding. Turning now quickly to RDC exemption funding strategy. I'll go through this very briefly. This was a topic of a staff report a couple of cycles ago, where we had estimated the annual cost of discretionary development charge exemptions at approximately $15 million a year. Within our budget, we have about just under $5 million sitting in the budget right now, so we have some fairly significant increases to bring through. This was the table from the report that we brought forward that was approved in principle subject to budget, and the increases for 2020 have been incorporated into both the user rate budgets and into the tax-supported budget. Something we're watching very closely this year as the cost of the exemptions exceed the relatively small budget provision we have in right now, which is suggesting we're going to be overall very close to break-even position in terms of the tax-supported budget in 2019. So again, the increases in the 2020 column have been reflected in the base budget. And again, this is a repeat of Mr. Murray's slide, just to reinforce the review that we do, the savings that we found in the base budget, both tax-supported and user rates. It's an ongoing annual exercise that we go through that, clearly has value in identifying some of these changes with respect to user fees, with respect to varying a variety of different expenditures. Now, briefly to issue papers. So this, Mr. Chair, was, I think, the slide that you were referring to. So this is straight out of the report. So a couple of comments on this slide. First of all, this represents this is every budget issue paper that's being proposed. So this is it. There's 6 or 7. There's 7. So we've got them all here. It's a small number. It's a small number for, I think, obvious reasons. We've had a lot of discussion about this at a staff level, and I just want to explain how these 2 columns work. And I acknowledge that we may have been able to do a better job of defining the columns. So the first column, what we call the 2020 budget impact, that's the full costing of the issue papers, which for the bottom 5, there's the same number in both columns. But for paramedic services and Grand River Transit, the numbers are different. So the question is, why are they different? So we'll do GRT first. The GRT issue paper that you're going to see, it'll be public. We'll have it published next week. We'll have 3 bundles in it. And you may recall that the plan was to implement the GRT business plan at a level of 35,000 new service hours every year. So what we've done is we've taken that 35,000 and we've split it into 3 different bundles. 2 bundles of 15 and a bundle of 5. And we cost each one individually and we explain the service that's identified in each case, basically to give council, budget committee and council, some options in terms of how and when those 35,000 hours are introduced. The right-hand column reflects what staff are proposing within the current position of 2.58% on the budget. So basically what we're proposing is approve the first bundle of 15,000 hours. That will have a $928,000 cost in 2020, as opposed to the full 35,000 hours, which would have a cost of almost $2.2 million in 2020.
So Craig, another way to characterize that, I know you're going to get a little more detail on the paramedic number, but another way to characterize that is you look at that right column, is that's what staff is proposing as service expansions in 2020.
That's correct. Yes, all this is, so budget issue papers in our world is service expansion.
Right. So service
And so it's just a question of how much and when and how quickly.
Right. Okay, Councillor Clarke.
So, in addition to the base cuts that you were able to find and spoke to earlier, these are the 2 areas that we're targeting to meet our target. Or are there others that we just haven't seen yet?
It's a really good question. I would say that so the reductions we spoke to in the previous slide are all incorporated into the base budget already. And the numbers in the right-hand column, specifically for paramedic services and Grand River Transit, are sorry, I just lost the word. These are reflected in the 2.58% budget that we're proposing.
But these are the only master plans or business plans that we're really looking at?
Yes, so I would say, well, if you look down the list, much of what's here relates to business plan and master plan implementation. Basically the first 5 are implementing various transit master plans, paramedic services master plan, and the staff positions for the Waterloo Region Housing Master Plan. So all of this is service expansion. We were just looking for options for budget committee to consider in order to meet or get close to the 2.5% target. So in GRT, it's approving 15,000 hours of service expansion. In paramedic services, it's recommending 2 additional 12-hour ambulance shifts with the necessary equipment effective July the 1st, as opposed to the number on the left, which is 5 12-hour shifts. And of course, that'll be a decision for Budget Committee to
Can you
make.
just elaborate on that for a second on the paramedic? Because we've already approved the 2, correct? Back in September? Subject to final approval here.
Yes, so through you, Mr. Chair, so back on September 10th, Community Services considered recommendations from staff on the update to the master plan. And through that report, approved, I guess, a couple of things. Reaffirmed 35% as the target unit utilization, and adopted a 2020 interim unit utilization target of 37.5%. So the proposed issue paper, on the right-hand column, the 433,000 levy impact, so that's the 2 12-hour shifts, is what would be needed, all other things being equal, to achieve that target in 2020. And so that's what's being recommended. Of course, if council wishes or budget committee wishes to consider more than 2, there are options that we could cost out of 3, of 4. We've costed out the 5-shift option. That will also be there for your review in the budget issue paper.
Okay, thank you. Councillor Erb? All right, Councillor Jowett?
Thank you, through the chair. So Craig, is it possible when we get our budget issue paper chart back that we could add a column that gives us the FTEs with all of these initiatives as well?
Yes, absolutely. Yep, you'll see that there'll be...
I think you've done that before, haven't you?
Absolutely.
Yeah,
So
okay.
it's a relatively small package. There'll be a summary page that will indicate all of the budget impacts as
Yep.
well as the staffing impacts.
I appreciate it. Thank you.
Absolutely.
Okay, Councillor Galloway?
Thank you, Mr. Chair. On the GRT business plan, Craig, so 35,000 is the business plan. This only represents 15,000. The other bundles are 15 and 5. Now, I haven't seen the issue paper yet. So, and maybe you don't have to tell me, you know, what's in each bundle specifically. I'm just kind of curious about why it's 15, 15, 5 as opposed to some other number. I'm sure there's some order to that. And we'll see, I guess, we'll see that in the issue paper. But my question, I guess, then is, in 2018, I think it was, maybe I have the years wrong here, Council approved the GRB business plan implementation by, in part, approving part of it for the current, what was then the current budget year, and part of it was for January 1st on the following year, of course, subject to a further budget approval. Was it January 1st, 2019 that something came into effect, or was it January 1st, 2018? And did we do it again last year?
So through Mr. Chair, I think it was April 1st, not January 1st.
That could be,
I just can't quite remember the year, but
I think
we
it might
can
have
we can
been
look it up.
418, but we could find out. We have done it. I know what you said. We've
done it, but did we do it 2 years in a row or just the once?
What, just one, as far as I remember.
Okay,
But-
well, that's fine.
Yeah.
So I guess we'll see what the budget issue papers look like and what
Yep.
routes and
Yep.
so on and so forth. And then I suppose that's an option we can consider as well.
Okay. And further to that, I think it's also, when we're looking at more information, I think it'd be really beneficial for committee to have a review of the last, well, maybe go back as far as 2001, when the region assumed control. That's not the right word, but when the region was, there was an agreement that the region was to deliver transit right across the region of Waterloo, and what that expenditure looked like in 2001 compared to where it is today. You can look at per capita analysis and all kinds of different things, but I think it's fair to say that we have invested significantly in transit, and we've made it a major priority over the last 18 years. So I think it's important when we're looking at these issue papers and making decisions around enhancements going forward, that we look at it in the context of what we've done to date, including the LRT. And the other thing I would add further to Councillor Clarke's question is that are there other items in the budget that we might be able to have a look at, other master plans that we've decided? Is this list inclusive of all the master plans? Are there some that you decided to leave off the list? And also the operating impact on the roads budget, for example. How much do we spend on roads that are funded from the tax levy? And it'd be good to maybe have a look at that and have that come back as well to give council and committee an option to decide if that number is right going forward, or is there some flexibility there as well?
Yeah, so through you, Mr. Chair, I would say from a master plan perspective, nothing's been left off of this list. This list represents the small number of proposed service expansions for 2020. Other master plan, that being said, other master plans are reflected in existing capital programs to a certain extent within operating budgets already. But there's no further service expansion planned for 2020. So for example, if I think about the airport master plan, it'll be very easy to see in the airport capital program the projects associated with triggers 1, 2, and 3, as those are the 3 that fall within the next 10 years. They're there in the capital program. They were in last year's capital program. There's been adjustments, of course, perhaps to timing and costs, but there's no service expansion proposed in 2020. Hence, there's no issue paper, and so they're not on this list.
So you're saying that there are, of course, other master plans that we have in the running of the region, but this list are the ones that have an operating impact for 2020.
Yeah, that's probably a fair comment, because other capital programs, we think of transportation, airport, wastewater, paramedic services, all of those capital forecasts are, I would say, consistent with master plans approved by council to date.
Okay. All right, and then what about other budget line items? For example, I mentioned roads.
So if there's information that Budget Committee wishes to have on the roads maintenance budget, then we can certainly provide that. If there's any, specifics that you'd like to see, then please let us know. But we can certainly put some numbers together.
If you bring us back some information on that, I think it'd be helpful.
Okay.
All right, thanks.
Okay, I'm just going to speak briefly about capital, because we're going to talk more about this at the next meeting. So this is very similar to Mr. Murray's slide. We have a lot of existing infrastructure and a lot of growth-related infrastructure planned over the next 10 years. We have a relatively small selection of funding sources to look to fund our capital program. And of course, we finance our capital program through either revenue we collect from the current year, previous year's revenues that happen to be in reserves, or through long-term borrowing. At this point, the 10-year investment plan on the capital side, so you recall that user rate capital program is approximately $1 billion over 10 years. Tax-supported capital program currently sitting at about $3.5 billion over the next 10 years. And these are the major services, of course, that are included. And again, we'll provide details on some of the more significant projects that will be either continued or undertaken as we head into 2020. We showed this slide last year. It's just here for information, but it outlines both the funding and the financing piece. So for example, when we get into a discussion about development charges, in some cases we have money sitting in the reserve that we can use. In other cases, we need to borrow and fund the debt servicing costs from future development charges. That's part of what we go through as we put the capital program together. As we've discussed, I think already today, we have certain programs that actually have close to, if not adequate, levy capacity to fund capital investments. Most do not and rely on debenture financing. And as we've already discussed, our state of good repair, our asset renewal, it continues to be over-reliant on debt financing. And we've estimated that range of incremental contribution required to be somewhere in the $40 to $45 million range. And this is the table that shows the funding gap that's included in your staff report today, which we've reproduced here to show, where we see the most significant shortfall. And so basically, this is looking at the amount of funding that we would need in order to not have to debt finance asset renewal and what we had in the 2019 budget. And so we're somewhere, $40 to $45 million range. And that's the shortfall that we're trying to get at on an annual basis through the asset renewal funding strategy. Now, I need to talk for a couple of minutes about growth-related capital. So this is one of the reports that's on your agenda today. It's the third of three. It's called Funding and Financing of Growth-Related Capital. And there's just a short story I need to tell to explain why we're going to recommend what we are. So we had new development charge rates came into effect on August the 1st. We all know that Bill 108, which received royal assent back in June, has amended the Development Charges Act, but those amendments have yet to be proclaimed. So they're not in force yet. It's a key point. And some of those changes are, they freeze the determination of development charge calculations. So instead of doing the calculation at building permit issuance, it's done potentially much earlier at the time of a development application. This is problematic for municipalities and directly impacts the amount of DCs we can collect. Even more importantly, it delayed development charge payments for non-residential and multi-residential nonprofit housing. Significant cash flow impacts for municipalities, and adds more statutory exemptions, which again reduces the amount of revenue we can collect. Also introduces the community benefits charge, but I'm just going to leave that one aside for the moment and focus on the development charge payments. So last Wednesday, we published our report, and it requests the province to not proclaim those amendments. Don't do it. It's a bad idea. It has significant implications to municipalities and our ability to fund new infrastructure. We recommended the report be circulated to the minister, local municipalities, other groups, and that we should undertake some consultation with the development community to get some input from them on how we were going to fund the infrastructure that's needed for growth to happen. In addition, through the report, we've identified that staff are proposing to delay certain transportation capital projects to mitigate the collection risk. And here the risk is that projects go ahead, we debt finance them, we won't be collecting enough development charges to pay the debt servicing cost. So that's what we're trying to manage. So this was Wednesday, early afternoon. Later that afternoon, the Minister of Finance delivered his fall economic statement, and he listened in those 3 hours that passed between the time our report was published and the time of the fall economic statement. They delivered the economic statement and also introduced Bill 138, which received first reading. And importantly, Bill 138 is very short. So it's an omnibus bill that amends about 40 different pieces of legislation. There's a very small piece that amends the Development Charges Act and would revert the DC payments for commercial and industrial back to building permit issuance. So remember, the Act is amended by Bill 108, but not proclaimed. And Bill 138 recommends amendments to these yet to be proclaimed amendments, if that makes sense. And there's also community benefits charge.
Good work.
Sorry, yeah, I know. Take full credit. Community benefits charge is also going to be appealable to the LPAT, but we're going to deal with that on a separate matter. This first change is hugely important for municipalities. In our previous reports, we had estimated that this had a $100 million cash flow impact over the life of our bylaw, and would have significantly increased the amount of growth-related debt that we would have had to issue. So this is an extremely important change. So as a result of that change, from last Wednesday, we're now updating the financing of the water, wastewater, and transportation capital programs. And so this is why in the earlier slides on the user rate budgets, we said we can't say much about debt at this point because we're still updating the forecast to reflect what we think the new rules are going to be, because as of yet, it only has first reading. It's not law at this point. So we recommend today that you take no action on the staff report that we released last Wednesday and is before you today, because the rules have changed. What we'd like to do instead is follow up with a report on Bill 138. It's a brief bill, at least as it impacts development charges, but there are other things we think the province should do to the unproclaimed sections of the Development Charges Act. So we're busy drafting another report, this time on Bill 138, that we hope to bring forward either on November 26th or to December 3rd A&F. So our recommendation again is no action on those recommendations that are before you today. We'll be back to you.
Okay, we have a question, Chair Redman.
I would just caution staff to be really careful on the wordsmithing. Who knew you were this powerful, Craig?
Yep. Okay, so key messages on capital program, and we're in the final stages here, Mr. Chair, so thanks everyone for your patience. We've talked about most of this. We need to build the operating budget capacity to finance capital. Like at a high level, that's really what we're trying to do. And then we can focus our debt on new significant expansions to our infrastructure. A quick comment on the police budget. This was referred to earlier. This is, again, a table from our report. This summarizes the budget, at least as it stood as of October the 16th, the last Police Services Board. Total spending for 2020 estimated at $200 million, 7.5% increase, which translates into a 1.77% all-in tax rate increase in 2020. The process, as we understand it, is there's a budget update report going to the next Police Services Board meeting on November 20th. The police will be here for their annual presentation of their budget on December the 11th. And the plan, again, as we understand it, is to have the Police Services Board approve the budget on December 18th. Just quickly on public input, we have over the last 3 years introduced a online public engagement tool with respect to the region's budget. We've even created an educational video about municipal budgeting that you can see on our website. And we have a recommended approach through the staff report that's on your agenda today. And basically the goals would be to inform citizens of the costs of regional services and then to seek input in two different ways. One is the value of the current service levels that are in place, and to get feedback and input on the service enhancements being proposed during this budget process. So going back to the previous slide of those 7 service expansions, getting some feedback on each of those 7 and the perceived value of those particular service expansions. From a timeline perspective, subject to approval by Budget Committee today, we would launch the online public engagement tool a week from now. We'd keep it open for a month, November 20th to December 20th, and then we would report back with the results in the early part of January prior to budget approval on January 22nd. And that then brings us to our schedule. 3 more meetings, the 26th, the 11th, and the 20th, 26th of November, 11th of December, 22nd of January. And our preview of the next meeting, we have a lot to cover on the 26th. I think we're here for pretty much the whole afternoon. We'll look at the start time again, but we have detailed presentations on user rates. We'll have the Grand River Conservation Authority here for their annual budget presentation. We'll provide a more detailed overview of tax-supported operating budget and capital program. You'll have the budget issue paper package. We'll go into the budget issue papers in a lot more detail. We'll have a handful of information papers. We'll try to respond to as many of the requests that have come out of today as possible. Some of those requests may come forward on the 11th of December, but we'll try to get as many as possible covered off for the next meeting. And it's our first public input meeting as well, which will be at 6 p.m. on the 26th. So key messages, I think we're at the end here. In terms of the context where we are, low interest rates, fuel prices going up, we've had delays in the provincial funding reductions, but we see them happening in the following years. On the capital side, funding for asset renewal is important. Sorting out Bill 108 and Bill 138 is a priority, and how that impacts the funding of growth, RDC exemption funding strategy, and then operationally, service expansions relating to master plan approvals, service contracts, winter maintenance, and a long list of other impacts on the budget. Currently sitting at 2.58%. So we're close to the council-approved target. We're still looking at a few items, and those will be reflected in the budget book, which will be released next week. And with that, Mr. Chair, I'd be happy to answer any final questions, and thank you for your attention and patience.
Okay, we do have a couple, Galloway, Erb, and Jowett, so starting with Councillor Galloway.
Thank you, Mr. Chair. Craig, have you or staff identified any expenses in the operating budget that might qualify for tax stabilization funding to help mitigate the impacts?
Through you, Mr. Chair, I would say, so there are a couple. So in the paramedic services budget issue paper, we've treated the 1-year lag of provincial funding in a similar manner to what we have before. So we are proposing to use the tax stabilization reserve to basically phase in the cost of the service expansion until the provincial funding catches up, which is something we've done for, I don't know, maybe 3 or 4 years in a row now. I think it's been very effective, very appropriate under the circumstances. Of course, some uncertainty about provincial funding in the future, but for now, we think that's a strategy that we should continue. So you'll see that in the issue paper. The other one that comes to mind is the pilot for snow clearing on the dedicated bike lanes. Because it's a pilot, that was approved to be funded by the tax stabilization reserve. So that's reflected in the budget. There may be... Right, so the other one that comes to mind is the contribution to the SWIFT project, which you may recall the incremental funding in 2019 was funded by the tax stabilization reserve. We've taken a similar approach for the 2020 increments, about $225,000. That's proposed because that's an example of, we need funding over 4 years and then it falls off. So we have a little bit of it funded from the levy. We now have more of it funded from the tax stabilization reserve. Those are the three that come to mind. If there's any others, we can provide that in a separate response.
And we'll get the quantum of that, of those three, the quantum?
The quantum of those three? Yes, absolutely. It's going to be 6, 8, 1 million, 1.2 million-ish, but I can get you a specific number.
1.2 in total?
1.2 in total.
Thank you.
Yep.
Okay, Councillor Erb.
Thank you, Mr. Chair. Back to the development charges. The change also includes that they're all payable up front now and not spread over 6 years. Is that right?
Yes, through you, Mr. Chair. That is the significant change for commercial and industrial specifically. So rather than, under Bill 108, payments would have started at occupancy and it would have been 6 payments over 5 years. The change through Bill 138 is to revert the payment back to at the issuance of building permits. So we're basically going back to where we are now before these new changes come into effect.
Okay, thank you.
Okay, thanks, Councillor Jowett.
And thank you through the chair. And so, Craig, this online public engagement video, we want to solicit as much input as possible, and I also think it's a good way to get people to know who does what, because I still can't believe, but a lot of people still don't know who does what. But can we, would that be a link we could be receiving from staff at November 20th and send it out to as many places as possible?
I would suggest, Mr. Chair, we'll send it out either by the end of the day today or first thing tomorrow morning. Even
better. And do you also send this out through all the email lists that we have as potential constituents subscribe to our programming? Do we attempt to send it out in a mass list, or is that just asking too much? I'm not sure that at this point we're sending it out, but Stacey may be able to help us with that.
So there's a link to the video right on the Engage page.
So here's my problem with that. The average person likes you to make it very easy to access information. So I was just kind of hoping we could be broader with our engagement by way of actually sending it to people rather than them finding out that we may have a link on our page. I just went to look for it myself, so I guess it's not there yet, right? Or if
It should be there.
Okay,
It should
so
be
that's
there.
what I mean.
We'll
Just
point you to
quickly
it, and
poke around,
we'll explore whether there's any other options, at least to find a way to be more proactive in getting it out, at least to those that are, registered on our site.
Well,
If
'cause
there's
we
any
do-
other ways of getting it out, we'll explore that.
Yeah, because given that there's still some folks out there that aren't on social media, and that, so you know what I'm saying? So at least if that's our main way of communicating it, we should probably try to maximize that potential, I guess.
Yep,
Thank you.
we'll look into it.
Okay.
Thank you.
Thank you. Okay. Thanks very much, Mr. Dyer. I'm just wondering if you can go back to the scheduled meeting dates slide. So one of the things that we didn't talk about is a service review. So there's an ongoing subcommittee, ad hoc committee looking at the service review, and that will come back with some recommendations to help us with our budgeted numbers. So I'm just wondering where that fits into our schedule here.
Yep. So I'll try to give you a bit of background, and I was going to send an update to all of council. So I'll do that in addition, but it'll basically be what I'm about to say. So KPMG is working away on the service review. The steering committee met a few weeks ago and worked through a long list of potential opportunities for improvement and cost savings that KPMG had identified. Based on that, they've kind of identified sort of three categories of sort of opportunities. They're planning to, I think the current plan is for them to present their draft sort of findings, observations, recommendations to Admin and Finance Committee on December the 3rd. Given the amount of work that they still have to do. Originally, I think the target was November 26th, but I think that's slid about a week to A&F on December the 3rd. And then I think what you'll see and what the steering committee saw is, there's probably a few items that KPMG is working on that council could potentially take quick action on as part of the 2020 budget. Most of the things that they've identified would require more detailed analysis and investigation before council was probably prepared to make decisions. These are sort of big, complex issues. So we're also contemplating right now, following December 3rd, with a staff report on December 11th that would seek direction on which of those items that KPMG has introduced does council want to consider as part of the 2020 budget, and which ones would be dealt with after the 2020 budget. So we're December 3rd and then December 11th.
So essentially on December 3rd, we'd receive the report, ask questions for clarification, then refer to Budget Committee for December 11th.
Exactly, and the action on December 11th, we believe, would be, which of those items is council going to want to look at further as part of the 2020 budget, and which ones would get deferred until after the 2020 budget.
Okay, so then in terms of just playing out the process, so we would look at those proposed recommendations. We're not making any decisions on December 11th.
Correct.
Right, so we would have discussion and come to some kind of consensus on what we're going to refer to the January final
22nd.
budget day?
Yep.
Yeah,
Yep.
okay.
Yep.
All right, okay. Councilor Lorentz, thank you, Mr. Murray.
Thank you, Mr. Chair. Through you to Mr. Murray. So where did the long list of items that the committee's working through come from?
So if you think back to KPMG's work plan that we tabled with council a few months ago, so their overall approach has been they've updated what they call service profiles for all of the services that the region provides. So there's probably like 100 of these service profiles. And there's a couple of key elements of the service profile. One is for each service that the region provides, they basically identify, is this service mandatory, essential, or is it more discretionary or optional? So that's kind of one category is, what are some of the things that the region does that we don't have to do? Then the other thing they've looked at is sort of performance measurement and the cost of our services relative to comparator municipalities. And so then in some areas they've identified, the cost of our service provision is relatively higher than other municipalities. So the list that they've largely put together are either services that are highly discretionary, things that the region does that we don't have to do, and or services where our cost of service provision is relatively higher than comparators. And so basically they're saying these are potential opportunities for improvement, opportunities for cost savings, either by getting out of things that we're doing that we don't have to do, doing them differently, doing less of them, and or looking at other ways to provide the service. So that's where the long list came from.
So just to be clear, we didn't get any suggestions from the public. This is just something that we did in-house, right?
KPMG did this. That's what we engaged KPMG to do. And given you'll recall, this is funded by this Provincial Audit and Accountability Fund. And when we first launched into it, the deadline for their final report submission was the end of November. That's since been stretched out to the end of December, so we got another month. But given the really, really tight timelines on this project, there really wasn't an opportunity for public engagement. But this goes back to my comment about many of the opportunities that they've identified, really, before council makes decisions on them, would need further investigation and I think opportunity for public input, because a lot of these opportunities, you'll see them, they have potentially significant impact.
Okay. So they haven't reversed funding on this yet, have they?
Pardon?
The provincial government hasn't reversed funding on this strategy?
No, not yet.
I think we
In
cashed
fact-
the check.
Pardon?
I think we cashed the check, didn't we?
I'm not sure if we've got the money yet, but just on that point, at the same time they announced the outcome of the regional government review, they also announced additional funding for municipalities to explore opportunities for improvement. So that's this, for large municipalities, that's this audit and accountability fund. And I think there's 39 large municipalities in the province that are eligible for funding. That's this fund. It had $6 million in 2019, and they've extended it to 2020 and 2021, $6 million in 2020, $6 million in 2021 for the 39 large municipalities to share. So that's the amount of money that they've made available to us and the 38 other large municipalities.
Wow. Well, thank you. I'll look forward to discussing and reviewing that report.
Okay, thank you very much. That concludes the budget overview. Thanks very much to staff for that and for everyone for your attention and participation. We had a couple items of business to take care of on page 23 of the agenda, the public engagement strategy. Can I have a mover and seconder for that? Councillor Lorentz, Councillor Jowett. All those in favor? That's carried. Thank you very much. And a motion to take no action with respect to the report on page 27. Councillor Foxton, Councillor Kiefer, all those in favor? That's carried. Okay, thank you very much. And next meeting, November 26th, motion to adjourn. Councillor Harris, Councillor McGarry, all those in favor? That's carried. We're adjourned. Thanks very much, everyone.